Welcome to Big Idea Investing. It's your host, Dylan Loomis. So, a different type of video today. I really don't have clear answers on what's going on here, but I want to collaborate with you guys and try to actually figure out the truth. So, on Reddit, we have some trending posts about ARK changing their prospectus language. Basically, some people are saying that ARK is eliminating that 10% portfolio holding for a specific company and increasing it to 30%. That would, of course, have some pretty big implications, but this situation is about as clear as mud, as other people are saying that they've had the ability to go up to 30% for a specific holding for the entire time. And so I want to actually take a closer look at this and see what's going on. So this was the first post, and these are the two links that I have pulled up. We'll take a look at in a second. But basically, this person is saying some things are changing with SPACs, which is true. Some things with ADRs are changing, which is true. But this part, remove 10% limit on investing of assets in single firm up to 30% now, and remove limit on investing in 20% of a single firm shares. And then they say seems to allow them to make even bigger bets on specific plays. So like before, if Tesla grows and it becomes more than 10% of a single ETF holding, they would be forced to sell shares. If this were true, that would allow them to then hold Tesla instead of having to sell and rebuy, etc. And this is the other post. I linked to both of these Reddit threads below, so if you want to take a look and go through some of the comments, we'll do that at the end. But first, I want to actually look at the actual documents themselves. So like I said, just stick with me for this, and I really want to know what your opinion is. Am I missing something? Maybe I'm reading it improperly, but this is what I'm getting from these documents. So this is the updated supplement. We have it right here, supplement dated March 26, 2021. That means it's updating the prospectus and summary prospectuses for the trust dated November 30th, 2020, which is this document right here, Form N1A and the ARK ETF Trust. And then we have the date right here on November 30th, 2020. So back to this new supplement. So here's what we have. Effective immediately, the prospectus and summary prospectuses are revised as follows. The first update, first bullet point, summary information, principal risks, equity risk. That section of the original prospectus for each fund is hereby deleted and replaced with the following. You can go through and read through this if you want. I'm not going to actually do that right now. So this section says nothing about portfolio holdings or weightings. This is all about SPACs and equity securities risk. Literally, it just says that these stocks can go up and down, and investors should expect that. Okay, so the next update, the additional information about the fund's investment strategies and risks, principal risks, yada yada. That section of the prospectus is hereby deleted and replaced with the following. Then it's same thing, goes over this equity risk paragraph and then more about SPACs. Once again, you can see it on the screen and go through, but there is nothing in here about portfolio weightings being changed from 10% to 30% or anything like that. Now, here's where it gets interesting. We have the final two bullet points of this updated supplement. The first one, the first and second sentences of the additional information about the funds, investment strategies and risks, additional investment strategies, actively managed funds section of the prospectus are hereby deleted. So let's actually find that specific section on the original prospectus and see what it says. Additional info about strategies and risks. So let's go to the contents right here. Additional info about the fund's strategies and risks. Okay, that's part one. Then we want additional investment strategies, actively managed funds. So under there, additional investment strategies, okay, and actively managed funds. Okay, and what is it saying? It's saying the first and second sentences of that section of the prospectus are hereby deleted. So the first and second sentences are deleted. So here we have the first and here we have the second. As non-principal investment strategies, each actively managed fund may invest no more than 35% of its assets in depository receipts, including sponsored ADRs, rights, warrants, preferred securities, and convertible securities. An actively managed fund may invest up to 10% of its total assets in unsponsored ADRs traded over the counter. So this section is being deleted. Now, correct me if I'm wrong, but this is talking about ADRs, rights, warrants, preferred securities, or convertible securities. I don't see anything about common stock. And then the second sentence is also talking about unsponsored ADRs that are traded over the counter. So my interpretation is the Reddit post so far has a misinterpretation of what those two lines are actually referring to. But like I said, what do you guys think? That's part one. But going back to the updated supplement, let's take a look at the last bullet point. The last two paragraphs of this section right here that we'll find, sections of the prospectus are hereby deleted. So we're going to go find this exact section, same additional information about the funds, additional investment strategies, but now we're going to look at the all funds section. So now we're in the section already and all funds. And what did it say? It says the last two paragraphs of this section of the prospectus are hereby deleted. So the last two paragraphs of this section are deleted. It says each fund will not invest more than 30% of its total assets in securities issued by a single company, fund, or of short-term financial products of such company. Each fund will not invest more than 20% of the total number of outstanding shares issued by a single company or fund. So it would seem to me that this updated supplement is removing these two lines. And if that's the case, then there would be no threshold for, upper limits of owning a certain percentage of a single company. Now, I thought to myself, maybe for these Reddit posts to be right, the original prospectus before it was updated, maybe it had different numbers there. But I went and pulled up I'll show you the original prospectus. And here we have it, Form N1A, and this was on November 30th, 2020. So this was how it was when it was first filed. And if we go to that same part, we'll go to additional risks. So the original prospectus right here said the exact same thing. Each fund will not invest more than 30% of its total assets in securities issued by a single company, fund, or short-term financial products of such company. And then it follows, each fund will not invest in more than 20% of the total number of outstanding shares issued by a single company or fund. So this is when it was first put out, and then we have this update saying it was going to delete these two lines that were the same, that it's updated and the same back in November. So honestly, I'm a little bit confused. I'm not reading what these Reddit posts are saying. They're saying somehow they're removing a 10% limit on investing assets in a single firm, making it up to 30% now. But I'm reading that right here that this line is removed, meaning that technically, if that were the case, there wouldn't be any limitations on how much ARK Invest can own of a single company in its ETFs, which of course doesn't make a lot of sense, but I'm just reading the documents for what they say. And like I said, if you guys want to look at these Reddit threads, you can go do that. You just read through the comments. There is a lot of confusion, people on both sides. And like I said, reading through the actual documents, couldn't piece it together where these original posters are getting that information. So please let me know what you guys think. Am I missing something? Am I reading this wrong? I would love to be corrected and get to the bottom of this. But for now, I wouldn't make any crazy assumptions about what's going on or not going on. And hopefully in the coming days, we can get more clarity on this situation. Because of course, it would have some pretty big implications for how ARK trades Tesla and some of the bigger, higher conviction holdings in their ETFs. It would also, of course, give them a lot more flexibility in terms of how long they can hold some of those high conviction holdings. So like I said, as they grow above 10% of the weight in a specific ETF, they are not forced to sell, which is a good thing. But at the same time, sometimes selling, locking in profits, and then buying the dips is good for the fund. So you can definitely make arguments both ways. But like I said, I really just wanted to get this out there to collaborate with you guys and hopefully hear from you. I will read all of the comments. I would love to see what I'm missing, or maybe you agree with me and you're not seeing what these Reddit posters are sharing. But thank you for watching. Please like this video if you did. Click that subscribe button and the bell to stay tuned for updates on this topic and all of the other things we'll be talking about. But until next time.